Hi, and welcome to the Silicon Insider podcast. Hey, Scott, how are you?
All right, Mike. Thank you.
Uh, we got a lot of news this week. First of all, I wanted to visit what happened in China. Well, actually, the meeting between Trump and Chinese Chairman Xi about tariffs and soybeans and precious metals and all sorts of things. And it looked like some things were successfully agreed upon. The biggest one seems to be the 1 year pause, a 1 year pause on the Trump instated tariffs that were at the heart of the trade war that have been going on for a while. That's been had the world's attention. Uh, they met in South Korea, the city of Busan, and that among the topics, rare earth metals. Uh, it seems to be that China's restrictions they've agreed to lift them. Uh, Trump has agreed in principle to lift the export restrictions on Nvidia's AI chips, but Blackwell, the state of the art chip, that really wasn't discussed at all. It was just the earlier uh, generation NVIDIA chips that were discussed. And in addition, to, as part in more than rare earths, um, they also agreed. China also agreed to start buying soybeans again from the United States, which I think is going to make Canada rather unhappy, but it's dealing with a major political weakness of Trump. So that's basically it. These new measures will be paused for the next 12 months, and Trump has agreed to lower Chinese tariffs by 10%. So I think that's momentous. There's some dispute on whether the United States or China came out the winner on these negotiations. The consensus seems to be China got the edge on us, but that remains to be seen. What do you think? I mean, resuming the HTO chips from Nvidia in China, uh, continuing that and using that maybe as a launch pad for Blackwell, uh, seems like a good sign, I guess, but maybe not for American security. So, what do you think?
I mean, from where I sit in Silicon Valley, it's not so much about who won or who lost. It's certainly not about soybeans, although that's important overall to the country. We're waiting on news of TikTok. We're waiting on news about what NVIDIA can and can't do. But, and goodness, over the last couple of days, we have had a cavalcade of earnings dominated by how much they're spending on AI on these things. And it's almost like, with the exception of Apple, these companies aren't even bringing up China. They're all spending money with and on each other. And so the tariff issue, I think, is going to be important, especially as we get towards Christmas shopping.
Yeah.
But boy, everyone is just looking at what we can sell and how much, because the valuations are just going nuts because of all the AI spending that we're seeing.
Oh, yeah. I'm looking at the numbers. Well, first of all, that was going to be my next item because we had another milestone event. And by the way, but I want to mention that uh, China, they basically, the Chinese government, the CCP, notified Chinese chip companies and people that use semiconductors that they wanted to see a moratorium on NVIDIA's H2O architecture, the former generation. And literally, there were no sales of H2O chips in China last month. I mean that's the control and the influence, if that's the right word, of the CCP on China's semiconductor acquisitions. I mean, when they say don't do it, You don't do it. So it's interesting to see. Maybe this is a breakthrough on reopening the door for Nvidia. Though I'm not sure, as you noted, Nvidia needs China right now. Not with these numbers. And right, there was no resolution on TikTok, which surprised me because I thought that would get done at this meeting, but it almost didn't even get discussed from how it appears. So next, Nvidia, Wednesday. Did you see this coming? Did you think it was going to happen this year? Nvidia became the first $5 trillion company listed on the New York Stock Exchange or NASDAQ in history. The first one to cross the $5 trillion market valuation.
Yeah, I mean, they have been on such a tear. If you think about it, they hit $1 trillion, what, a couple of years ago. They hit
Yeah.
4 trillion a few months ago. I mean, $1 trillion used to mean we've spent an entire lifetime building this company and we've finally hit our peak and we've got $1 trillion. Nvidia does 1 trillion in 3 months now. I mean, it's amazing. And we've seen further gains even since then. And Apple, just a couple of days before that, became a $4 trillion company. And they're not even doing AI all that well. So I think the tech valuations right now are just world beating. And what we're seeing here in Silicon Valley is going beyond any tariff concerns. And you're right, going beyond China. It is just staggering what we're seeing. Although, to be fair to China, they're buying a lot of iPhones, and that's helping Apple. But really, these companies are doing it on their own, and they're doing it largely here in America.
Well, it appears that part of the impetus, besides just the momentum this company, incredible momentum this company has, was the fact that Nvidia also announced a huge purchase working with the Department of Energy to build 7 new supercomputers, including one that will use 10,000 Blackwell GPUs. That's an astounding number when you consider that each Blackwell chip has basically 1 trillion transistors on it. And now the Department of Energy is going to build one supercomputer out of 7 they're buying that will use 10,000 of these things. It's a number beyond, it's literally a number beyond human comprehension, except for the notation. You can't count to it. There's almost nothing in the natural world, at least on Earth, that has that kind of density of components. It's just an astounding thing.
Yeah, I mean, and this is where it's interesting. People are questioning whether AI will be profitable. And, we saw that reflected in Meta's earnings. They're spending all that money, and is that going to come back? And that's why the stock went down a bit. But other companies are just flat out selling what they make. And you can say it's because of AI. You can say it's because of the hot new demand. But the fact is, Nvidia is just selling a ton of chips. AMD selling a ton of chips. Apple selling a ton of iPhones. Amazon, I mean, they just raised their spending forecast as you and I speak on Thursday evening to $125 billion as their AWS continues to hit new highs. This is just a tech boom that we haven't seen the likes of before. And investors are just piling in right now, as are buyers of these products, because I guess they just don't want to be left out.
Well, among NVIDIA's other announcements, included a deal to work with Uber to build a fleet of self-driving cars, an agreement to sell 1,000 GPUs to drug maker Eli Lilly, and the company also announced it is working with Nokia to help develop next generation 6G cellular technology. Oh, and it also announced tie-ups with Palantir and Oracle, as well as partnerships on a wireless 6G build out with telecom companies including Cisco, T-Mobile, and it's powering robot initiatives from companies ranging from Amazon to Foxconn, Caterpillar, and Belden, among others. That's quite a list.
Yeah, I mean, when you throw $1 billion at Nokia, which really hasn't been relevant for a long time, you are
Yeah,
spreading
I
the
remember
wealth,
looking at that and going, Nokia.
right? But that's saying, hey, let's get the Finns in on this. It's worldwide, and it's almost like this Nvidia economy. And then I throw OpenAI in there. Just the investments they're making are shrewd, and I think are going to be profitable for some time.
Yeah, well, and if you're getting build-ins, your product being, part of brand new technologies at the cutting edge, it's hard to fail. I mean, if Nvidia were ever to go down, I mean, maybe AMD could pick up the slack, but there's a lot of companies that are now depending on design ins with Nvidia, and these design ins are going to, go down a path that may last for generations.
Right. It's almost as if Cisco and Oracle and Qualcomm during the dot-com boom, as their share values were soaring, if it was almost what if they were investing $1 billion in what came next? I
Yeah.
don't know if that would have been good or bad, but if it was indeed what came next, they wouldn't have cratered. They would have said, we're not only doing this boom, we're investing in the next boom. And I think that's what Jensen Huang is trying to do here. And, he hasn't been wrong yet.
No, he hasn't, and he has an upcoming meeting again with President Trump. It's going to be interesting to see what comes out of that. Uh, I wouldn't be surprised if Washington, if the government, the Trump administration, tried to get a piece of Nvidia, to get purchase some stock from them. I don't know if they Nvidia be willing, but this seems like something that this administration likes to take a stake in, that we saw with Intel.
Yeah, unlike Intel, I think they'd have to take a number when it comes to Nvidia.
Yeah, and they have to get in line. Yeah.
Yeah.
Okay, let's go on because a momentous week for the big, the Magnificent Seven. Shares of Apple rose as much as 4% Wednesday, uh, as you noted, briefly pushing the company's market capitalization above 4 trillion for the first time. Uh, Now it lost a little bit yesterday and today, but still 4 trillion, and that's a company that's not yet, as you noted, is not really in the AI space.
Yeah, I mean, Apple is a $4 trillion company. Look for that to rise more. As you and I again talked Thursday night, Apple just reported earnings, sold a lot of iPhones, a positive outlook in the future, which people like. Stock up, as you and I speak, about 3%. Even in after hours trading, that would put it even higher than the $4 trillion it started the day at. This is a company proving if you stick to your knitting, you can do really, really well. I mean, services way up, software way up, iPhone sales strong. And it almost seems like when Apple just sort of stays away from the AI talk, they do better. And I had a feeling going in that, hardware is hardware. They're a delivery system for all this AI because we're going to do it on our phones and, laptops, et cetera. And Apple just does well what it does well. And I wouldn't be surprised if at some point it either just flat out bought an AI company, kind of like it did with Siri years ago, or just sort of made peace with the idea that in order for OpenAI to get in all of our lives, the iPhone is really a part of that. And I think that's part of the reason people are just snatching them up.
At some point, the curves in terms of Moore's law between Apple and Nvidia, as Nvidia starts producing ever smaller chips, not just huge ones, you could see it getting to the size that those particular line of chips could be available for iPhones, and that would be monumental. Let's go on because we also have Microsoft, and it rose above 4 trillion, I think, for the second time, isn't it? It shares
Mhm.
by 2% as of 11:30 a.m. Uh, this morning, I think. And its market cap is now around 4.04 trillion. Uh, Meanwhile, let's see, so it's Apple third behind Microsoft, Nvidia in first place as the world's largest companies, and ahead of Alphabet, which is now at 3.2 trillion, Amazon, which is at 2.4 trillion, and I didn't even think of these guys, Broadcom at 1.7 trillion. We have, you know, seven companies now, six companies that are now over, $1 trillion, and a couple of them approaching, well, over three of them over 4 trillion, and one of them coming on fast, Alphabet at 3.2 trillion. We live in lively times, pal.
Yeah, I mean the valuations of these companies are staggering, and yet it's been a while since we saw a real big shakeout of
Yeah,
any of these big tech companies. You could look back at March and April and say, wow, a lot of these companies lost half their value, but they just climbed right back up. And it's been a really, really long bull run, largely just on the promise of AI. And so at some point, this thing has to deliver, and I think deliver big time. And we just haven't seen that yet, except for Nvidia being able to sell everybody and their uncle these high dollar, super fast chips.
yeah, and it has to be incorporated at this size. It has to be incorporated into daily life. I mean, it has to become AI has to become a foundation piece in the world that's emerging. And it looks like it can get there, but you know, to be something that's integrated everywhere is it's still got a ways to go, and it could stumble at any time. By the way, the one company that didn't do well this week of the Magnificent Seven was Meta. And it's interesting because it took a beating. Uh, its third quarter earnings weren't bad, but it announced that it plans to further hike AI spending for the rest of this year and into 2026. Now, everybody else getting deeper in their commitment to AI got rewarded, but Meta fell 11% midday. I think it was Wednesday or Thursday, as Wall Street analysts digested the news and gave a thumbs down. Now, why that happened to Meta, maybe you know better than me. Maybe they thought, oh my God, he's going to go back to spending money on on his goose chase and chasing the white whale, and they thought maybe that's how he's going to go with his AI investment, and they just said no. What do you think?
Yeah, I mean, Meta has been extra sensitive. Their investors extra sensitive to big, big spending,
Yeah.
unlike, say, Amazon. And so by saying, hey, we're going to spend a ton on AI that, again, hasn't been proven, and Meta also has had a huge run up. So some people taking some profits just probably out of safety. But, you call it the white whale. Zuckerberg is still spending on the metaverse and losing billions of dollars. And it's interesting because they said they made something like 400 million in sales, which to me sounds like a whole lot of those, uh, Ray-Ban glasses that are cool. I've tried them, but
Yeah.
to lose billions of dollars, even as you're finally picking up those sales, means that this is still a giant money pit. And I think investors just don't want to see that. Remember, the stock, which recently was like $800 a share, was
Yeah.
down to 90 because of all that spending.
Yeah.
Zuckerberg said, okay, we're going to be cautious about spending. And the stock went up like 8 or 9 fold. And now I just think some of the investors are getting a little bit impatient because he is still spending all that money on the metaverse.
Well, wouldn't you? I mean, the metaverse is like the Edsel of the digital age. I mean, a lot of money spent, they sell a handful, and they promote the hell out of it, but nobody wants it.
Right. And to sell Ray-Ban glasses, again, they're decent. They're not, I don't know that they're going to be a replacement for your phone or even another wearable like your watch,
Yeah.
but they do work pretty well for what they're trying to do. I just don't know that it's enough to get people into the metaverse, which turns out to be a really, really expensive endeavor for Meta. And I mean, obviously, Zuckerberg is committed to it. He changed the name of the company because of it. He invests and loses billions of dollars. And I think investors are just getting a little impatient with that. And they want to say, sure, spend on AI, but we're not having it with this other thing. We're going to take some profits until you wise up and just focus on where that money is going to be spent.
So Mark Zuckerberg, coming off the conference call, did something I you don't hear very often. He basically said the spending plan is designed to keep up with the demand for AI, but, and this is the big but, he said if the company overbuilds, it can absorb the extra computing capacity in the future. That sounds like a rationalization. The quote, we keep on seeing this pattern where we build some amount of infrastructure to what we think is an aggressive assumption, and then we keep on having more demand to be able to use more compute, especially in the core business. So he's saying, don't worry, even if I, blow money wildly on infrastructure, the market's going to grow so much that eventually we'll absorb it. I don't think that's a really comforting thing to say to investors, but I mean, it's worth a try.
Well, and it may not be comforting to Meta investors, but think about what that means to Nvidia and AMD. Like, okay, you guys are hitting record valuations because of AI.
Yep.
But even if AI is a bust, we're still going to need your chips. That's how important, Mike, the semiconductor market is right now to these companies when they're saying, even if this hot new thing turns out to be cold, we still need the compute power. I mean, that is some 1998, 99 kind of stuff where chips are literally the foundation of our economy. And, if you're an Nvidia investor and you hear Zuckerberg saying that, you're thinking, holy Toledo, we could strike out on this AI thing and they'd still need our high-powered chips. And that's really saying something.
Yeah, he finishes quote, I mean, it's of course possible to overshoot that, right? And if we do, then, we see that there's just a lot of demand for other new things that we can build internally, externally. Almost every week, people come up to us from outside the company asking us to stand up an AI service or asking if we have different compute that they could get from us. And we haven't done that yet. So he's basically saying there's so much stuff that we can't fail.
I
It's
mean,
waiting in the wings for us, and it doesn't even have to be AI.
too big to fail didn't work 17 years ago, but we'll see
Yeah,
if it works now.
I think we've heard this song before
Yeah.
in our distant memory. Um, okay, Amazon reported its third quarter earnings after the bell, and it beat the top and bottom lines as its cloud business grew faster than expected. Well, I mean, they've already seemed to erase the memory of last week when everything went dark. The good news is that the stock went up 9% following the report, and that seemed to justify the fact that Amazon also announced it's laying off 14,000 employees, a bunch of them in Silicon Valley. And if that seems terrifying, oh, also the company said of adoption of its Trainium AI chip is now a multi-billion-dollar business that grew 150% quarter over quarter, and that it launched its Project Rainier AI cluster with 500,000 Trainium 2 chips. So once again, we see these big numbers, but they're built on expectations. And those expectations may turn out to be a balloon, bubble or sand. A lot of a lot of predictions and a lot of valuations are being made on, look, we have a new chip, we have, you know, we're laying off people because we don't need them because we're replacing the entire middle management or our company. And yet we don't have any evidence that this is going to happen.
Well, look, I think Amazon is probably the poster child when people say Wall Street isn't the entire economy.
Yeah.
Amazon stock is at an all-time high. Their valuations are at an all-time high. AWS is making more money than ever. Amazon is doing more business than ever. And they just chopped 14,000 corporate jobs. I understand that robots are taking some jobs and AI is taking some jobs, but 14,000 corporate jobs, all in the name of efficiency, even as you're making more money than ever. And of course, Wall Street likes that, but you're putting people out of business. And that's a cycle that ends with people unable to buy from Amazon. And it's short-sighted. It rewards investors, but come on, these people need to work. They need to make money. And laid off people don't, shop on Amazon as much as people with jobs. It's just,
Yeah, and there's a whole Simon Legree element in all this too. It's pretty hard-hearted. I mean, a few months ago they were talking about, well, this is a period of no hiring but no layoffs, and companies are hanging on to their employees and all that. Well, this seems to end that. And I want to hear what the separation packages are for these employees. At what level were they at? And it just there's something cold-blooded about all this.
sure, they're doing it in the name of efficiency because Wall Street likes it.
Yeah.
But an economy can't survive if tens of thousands of people a week are being laid off. It just can't. And
It's interesting though that uh, the guy who wrote, an analyst told Business Insider that it takes a lot of company layoffs now. It takes a lot of them to quote move the meter, and he says it would take 20 Amazon level layoffs to actually impact the economy. You know, okay, but how about the lives of all those people, and where do they go from here? Because nobody's hiring, and they may never hire those jobs back in any way, even if these companies grow.
well, right. I mean, we're seeing growth in some of the AI startups and some of the companies that are growing. But we're also seeing a lot of people that are nervous because AI is taking a lot of corporate jobs, and even a company firing on all cylinders at its highest level is dropping that many jobs. And that means nobody is safe and no one can feel secure, because in the name of efficiency and a few stock points, they will lay off people even when they have more money than ever before.
And there you lay off people, but you also in your business assumptions are that demand is going to continue to grow. And it strikes me those are two curves that are going in opposite directions.
Agree.
Okay, so I searched around for some good news, and I think I found a little, but it's probably based on a fair amount of bad news. The average rate on a 30-year US mortgage fell for the fourth week in a row to its lowest level in more than a year. Lower mortgage rates it dropped to 6.17% from 6.19 last week, and a year ago it was 6.72. Uh, so I guess that's good news, but it also means that uh, more houses are for sale, and they're going looking for customers now. That demand is going down too, and so mortgage rates are falling. So good news if you're wanting to take out a new mortgage now, refinance. It's good news. For everybody else, hold on to your job the best you can.
Makes sense.
So that's it for now, folks. You can find us on Spotify, Anchor, Google Podcasts, Apple Podcasts, and YouTube. You can see Scott on Facebook and X, and of course, almost every weeknight on NBC Bay Area. We'll see you next week. Bye-bye.